Ever looked at your portfolio and wondered, what's the difference between your ETFs and mutual funds? Well, today we're going to find out. But first, let me introduce myself. My name is Warren Berger. I'm the owner of Luminary Financial Advisors. We're located in Cocoa Beach, Florida, and work with people all over the country to create tax-efficient retirement plans. So let's get started. First, let's talk about ETFs, short for exchange-traded funds. Imagine a basket, and this basket is filled with a bunch of different investment types: stocks, bonds, commodities, a mix and match if you like. Each ETF is designed to follow or track a specific index or sector. This allows you to have broad market exposure without having to buy every individual stock or bond in that index or sector. Now let's move on to mutual funds. These are essentially pools of money from a bunch of investors like yourself. This money is managed by a professional known as a fund manager. This person makes decisions about where to put your money, what stocks to buy, what bonds to purchase, and so on. So when would you choose one over the other? ETFs, because they're traded just like stocks on an exchange, can be bought and sold throughout the trading day. And they can do that at prices that fluctuate. This gives you, the investor, a lot of flexibility. Mutual funds, on the other hand, trade only once a day after the markets close. And they trade at their net asset value, which is calculated by dividing the total value of the fund's assets by the number of its shares. It's perfect for those of you who prefer to sit back and let the market do its thing. What about the pros and cons? ETFs usually come with lower expense ratios. Think of it as the cost of doing business. They're typically more tax efficient too. But there's a catch. With this flexibility comes the risk of overtrading. Mutual funds come with professional management, so someone else is making the big decisions. They also allow for automatic investments and withdrawals, which is a bonus if you're regularly saving or need a steady income. However, they usually come with higher fees and can be less tax efficient due to the way transactions are structured. So why do I often recommend ETFs for my clients' portfolios? It comes down to their cost efficiency, flexibility, and tax efficiency. They can be a good fit for those who want to make the most of their money. However, remember, it's not a one-size-fits-all. Both ETFs and mutual funds have their unique advantages and can be suitable depending on your financial goals and risk tolerance. I hope you found this helpful. If you'd like to discuss some help with your personal financial situation, I have a link below to my personal calendar for a complimentary conversation. Whether or not we're a fit to work together, I'll always make sure that I get you pointed in the right direction. I also have some links below to some handy checklists and flowcharts to help you on your personal financial journey. And last but not least, check out the link to our Facebook page called 10 Years to Retirement, where we try to demystify financial planning for pre-retirees. Thank you, and see you the next time.